Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update once again on a Tuesday. It's August 27th, 2024. Thank you so much for watching. And again, thank you for your grace in allowing me to have a day off for my birthday yesterday. It was great. I was able to get out in the sun and enjoy the beautiful weather. I know it's very hot, but on a boat, it was very manageable and quite lovely. So let me take a quick look at our McHenry County numbers for the last 7 days. We had 152 new listings, 118 under contract, 107 closed sales, 33 price changes, 2 expireds, and 43 currently on the private network. So what have we been talking about? About 8 weeks now in a row that we have seen more homes newly listed than gone under contract. Now, this is great news for the housing industry. Why? Because it means that we are getting somewhere in the inventory department. I mean, when I pull the info sparks, which is our way of tracking the information that is in the multiple listing service for our region, we're still not seeing the inventory go up on those and in that sort of metric, but I've got to believe that they are going up, that we are getting somewhere in the inventory crisis. And of course, when we have more inventory, that is going to mean that prices are not going down, but they're going to subside or quit going up so rapidly, making that affordability issue not as difficult for people to overcome. Because if we can see these prices kind of level out and stop going up quite so rapidly, it'll make it easier for buyers, which will also make it easier for sellers. Quite honestly, guys, anytime we've got an extreme, we know that it's going to make it difficult to navigate. So the more level of a playing field we have in the real estate market and in any market, it's going to make it easier to navigate. So we are getting more inventory. I have to believe we're going to see this come through on our info sparks. Right now, it's not showing up, like I said. Now we're at the end of August. We'll get our September numbers we'll get our August numbers somewhere in the first 2 weeks of September. So I'm really anxious to see where those inventory numbers are going to end up for the month of August. I have to believe that we'll have made some headway in the inventory. We're still going to be in a seller's market. You know, a seller's market is anything under 4 months inventory. And I heard an interesting statistic today. I was watching Gary Keller's speech from Mega Agent Camp, which happened the second week of August in Austin. I was unable to go due to moving my son to college, but I did watch the speech, and they were talking about economics. They always talk about our economy. It's so tightly connected to our housing industry. And one of the things that they had said is that between 1982 and 2018, only 2 months did we have below 4 months inventory. So it was either a fair and balanced market or it was a buyer's market from 1982 to 2018. Only 2 months where we had inventory below 4 months. Okay, so that was like, there was almost no seller's market in that entire time span. Now, in the last 3 years, we've only had a couple of months above 4 months inventory nationwide. And around here in McHenry County, I don't know that we've had any in the last 3 years. We've had mostly 1 and 2 months inventory. So we've had this inventory crunch for 3 years, but prior to that, we hadn't seen it at all. We had not had a seller's market at all. So that's why it's so strange for people who have not been participating in this market. I deal with a lot of people who haven't sold a home or bought a home in 10 years. So for them, the idea that this is a seller's market is just so incredibly foreign. So I don't know if this is just the new normal. This might just be our new normal, that we just have a seller's market, because again, we didn't have builders. If you look at home building and the building that's being done, we're right about at 1 million homes a year that's being built. New home starts are only at 1 million, which simply fills the bucket. That really just keeps us going with what we need. We need builders to build 1 million homes a year to deal with population growth. And we will have some attrition of homes, meaning some homes have to be torn down or are, eminent domain and things like that. So we need 1 million homes built minimum. And that's all they've been building for the last couple of years. Well, we are at about 15 years where they didn't build enough homes. So we are still in that huge deficit. So the seller's market and being under 4 months inventory nationwide is potentially just the new normal that we'll see for quite some time here. So some other things to look at in terms of our economy, because of course we have to understand our economy in order to understand what's happening with our housing market, is that the probability of a recession right now is at the highest it's been since the 1980s. So we have certain indicators, mostly it's the 10-year, it's the yield curve. And when we have an inverted yield curve, meaning the investments aren't yielding as much, we know that there is the probability of a recession. So a recession is almost guaranteed. Now, what kind of recession we're going to see is yet to be determined. So a couple different factors that are going to play into that is unemployment. So what do we expect to happen in the coming months? One is that we could have unemployment below 5%. Unemployment should be around 3%. That's sort of everybody's 4% is most people have jobs, most people are working, most people are making money to pay for the things. So if we have unemployment below 5%, interest rates will fall to about 6%. And home sales will go up. Right now, we're on trajectory to have about 4 million homes or less sold nationwide. That is extremely low. That is the number that we saw around 2008 during the crash. So 4 million homes sold would be, or less, would be very, very low. So if you are someone who's like, who's buying and selling right now? Well, we're always going to have some people buying and selling because of life events, marriage, death, births, all of the things, people getting job transfers, all of those things are going to cause people to move. So we're always going to have some people moving. We're never going to have a year where no one's going to sell a house and no one's going to buy a house. But we're at about the lowest level that it possibly could be, simply for those people moving out of life demands, okay? So that's 4 million. That's about what we're tracking right now. Other than that, what we could see is that if interest rates come down, we could see that go to 4.5 million homes sold this year, which means we'll have a very strong fourth quarter. So if those interest rates come down to 6%, we could see home sales increase. Good news. And we'll have more and more people deciding that, okay, I'm going to give up my low interest rate and I'm going to move. Because another factor that we can talk about is there are 86 million homeowners right now. 38% of those people own their property outright. 38% of those people have more than 50% equity. So total, we've got about 76% of the population of homeowners that own at least more than 50% of their home. Now, on the flip side, if you look at interest rates, 76% of mortgages have rates of 5% or less. 76%. So until we get interest rates to about 5 or 6%, there's a lot of people who will not be motivated enough to move. Now we've got another scenario that could happen with this economic trend and what we're seeing with unemployment rates. So if unemployment is between 6 and 8%, so remember if unemployment is below 5%, interest rates fall to 6%, home sales go up to 4.5 million nationally, annually. If unemployment is between 6 and 8%, and this is all speculation, please let me clarify, interest rates will fall rapidly to 5 or 6%, and we'll sell about 5 million homes. So that would be a real shot in the arm to the real estate industry. We better get ready to move and shake for fourth quarter because it's going to be busy. We don't know what is going to happen. Now, there was some news that came out last week after this speech happened, from one of the reporting companies that reports unemployment, and they readjusted their numbers from March 2023 to March 2024 to correct that there were 818,000 jobs not created, that they had reported that were created that were not in fact created. So what does that mean? It means that unemployment is a lot higher than the numbers that we've been looking at. So we anticipate in September, when the feds meet mid-September, they will for sure do a rate cut. Now, how big of a rate cut they will do, we do not know. We can only speculate that it could be fairly significant if it turns out that unemployment is actually a lot higher than we had anticipated. Now, if unemployment goes too high, then we run into some other issues where we've got major recession problems and the feds might do some other things in order to try and get us out of it. But that is yet to be told. So as of right now, it looks like interest rates could come down to around 5 or 6%. And if that does in fact happen this fall, we could see a huge fourth quarter for the real estate industry, which would of course mean prices go up, inventory goes up, and we get really cooking around here. So stay tuned for more information on that. But as of right now, we've definitely got some positive movement in the direction in terms of having inventory available. Not as many homes going under contract, but a fair number closed. And it's looking like we'll have a strong fourth quarter. So fingers crossed. I'm Miranda Alt with Keller Williams Success Real Estate. As always, if you have any questions, please reach out to me. I'm at 815-529-0777, or you can always email me at mirandaaltteam@gmail.com. Thanks for watching. Have a great rest of your Tuesday. Bye-bye.